All right, guys. What is going on? What is good? What is good, man? Welcome to Market Maker Monday. It is the first day of the week. You know what I mean? First trading day of the week. Maybe some of you took trades. Maybe some of you didn't. I don't know. I do not know. But do you remember what we talked about in regards to Monday morning? Right? Monday equities open, and how it may not be every Monday, but how typically Monday can be different. Why is that? Why is that? What's good? Mason, Felix, Eric, Jonas, Josh. Very good. Eminem, Scott, Convicted Capitalist, Roger, Daniel, 2020, Ram, Jorks, Pop. What's good, everyone? Yeah. So Sunday's gap over here. Right. Friday's closed, Sunday's open. Very small gap. Let me actually zoom in a little bit more so you can kind of see it. It's this, right? Very small gap there. We trade through it, back into it, and then higher. And that is important because of pre-market, actually. So we end up, oh shit, sorry about that. We do end up trading back into it here. We do overshoot it a little bit, no problem. And we are higher. So why would I point something like that out to you? What have we been talking about in recent weeks, for a long time, really, when it comes to, let's just say, I guess, reversals, right? A reversal is a reversal because it has a purpose. If we are bullish, right, the examples that I've been using, especially on indices, if we are bullish and the market does not present evidence of a reversal, of that the high has been set, or that we are going to trade lower, what is it likely going to do? What's the answer? And the chat is open today to members as well as future members, we'll put it that way, right? If we are bullish, if there's no evidence that it's bearish, what would it continue to do? Felix says go higher, further. Jork says if it's not bearish, it's bullish, basically. Okay. So what about today? Are we seeing evidence of that? Right? We cleared out all-time highs a couple weeks ago, right? Would that be bearish? Would we just short above a random set of highs? Would we just short the stock market because we're at all-time highs? Yeah, Mason, you got to play that Creed song. It's going to keep trading higher. Now, my theory is the Dow Jones still looks like shit. That's more of a fact, but my theory is YM should continue and clear those highs at some point. It's doing it rather slow. It is severely lacking behind the other indices, and I don't like it. I just don't like it. As a matter of fact, to even further prove my point, I actually got out of McDonald's this morning. I actually got out of McDonald's this morning. I may end up regretting that. I just have become impatient with it, and I did tell you what I did not want to see. I didn't want to see us trade to the low end of this imbalance. We did. And just like with Google, bro, I got out and look at this shit, bro. Back in like June, it was like a day or two in here. I was like, yo, I'm just getting impatient with it. I don't like, it's slow. They got these lawsuits. I mean, I'm still bullish, but I'm done with it. And of course, what inevitably happens? Boom. We are racing for the 190s. So I feel like this move here, right? I mean, I left with a small profit. It's nothing to be, it's not absolutely nothing to brag about. And I feel like that may be the case here, even though TradingView always fucks all my shit up. I still don't understand that. I don't know if that's a bug or what. Like that should be right there. Can't fucking stand TradingView sometimes. So this to me is super bullish. I may end up re-entering McDonald's. I think I may have jumped a gun a little bit. And that's okay. I'm not afraid to admit that, bro. I'm not going to come out here and pretend like I'm some perfect trader. I mean, I haven't taken a loss in a few weeks now. Yeah, but it's coming. It's coming. It's nice to have a 100% strike rate, but it doesn't last forever. I know at some point I'll get it wrong with stocks at least. But indices too, of course. And yeah, Jonas, you do get your ass kicked if you try to short bullish markets, right? If there's no evidence that it is bearish, picking all-time highs tops is very difficult. I know I exited the high of the week a couple weeks ago to the tick, but I did say in my market review that there was a element of luck to that. So, but anyway, I say all that to say, if McDonald's is still part of the Dow Jones, then if Dow on the weekly does run for those highs, if McDonald's is still part of that, of the Dow Jones, we have the most clean equal highs I've seen in a long time for this stock. And then just like I did earlier this year, to me, we should get in that gap, then we should get through it. If we revisit that, you bet your fucking ass I'm in there and going for those highs. You bet your ass I'm in there. But I do feel like this, I feel like getting out today with a small profit, I think that might be a mistake. But that's okay. I will re-enter later. Again, if we get what I think we should. So, what's good, Jordan D? What's good is I've got plenty of other books because the one I read yesterday was... Y'all bamboozled me, bro. Not you, Jordan, but like other people who posted Best Loser Wins by Tom Hugard. I'm never fucking listening to you guys again. I will never buy a book from the internet's recommendation ever again. It was just not a good book, bro. Sorry. Hate to say it. It just was not a good book. I read half of it. Out of 240 pages, I'm like 60% of the way through. And I just can't do it. I'm done. I'm done with it. So I won't spend the next 45 minutes on a rant about how bad that book is to me, but just know I can't in good conscience tell you to read it if I think it's bad. So we're going to lay that to rest. Best Loser Wins is just not a book worth reading. I think that, and here's a pretty strong opinion, but I think that and every other trading psychology book I've ever read absolutely bends the knee to trading in the zone and disciplined trader. Every trading psychology book always references trading in the zone. Every book bends the knee to that. Personal, you know what I mean? Personal opinion. Nothing has beaten trading in the zone. So even when I wrote mine, I'm like, look, there's no way I can outdo Mark Douglas and Paula Webb. It ain't fucking happening. So here's a couple of ideas, but for more, just go read their books. That's exactly why I did that. There's just no beating trading in the zone and disciplined trader. It just won't be done. Again, John Phibbs' opinion. So, but yeah, I agree, Josh. I think all-time highs are coming soon for Dow. I think that paints a beautiful picture for McDonald's if it's still part of it. I haven't checked. I don't know. But it makes sense. And then Google. Yeah. I'm kind of like kicking myself. I mean, obviously I didn't take a loss, but missing out. Yeah, missing out's kind of a bitch. But it's okay. It's okay. I think I kind of told you that back then. I was like, this still might rally, but I'm just over it. And it did. So, you know, take what you want from that. But anyway, let's come back to the actual point. Do you remember over the last couple of weeks how I've been saying when we look at a price leg, right? Like, let's just say this price leg here. There was an obvious sell program, and by obvious I mean looking at it in hindsight, right? Because I don't even think I mentioned Google anywhere in here until we got probably to the lows or slightly after, right? So with the benefit of hindsight, and drop a like on the stream, guys, if you could. We got 52 people. We got 14 likes. Wake the fuck up, chat. You guys are sleeping. We have a obvious sell program in here, right? It's just obvious. We had a gap down, could be earnings, I don't know. This was probably all-time highs as well. We had some old gaps and, you know, whatever low that is from September of last year, as well as like November's low as well. So the market came down, cleared that, cleared the low of September. Okay. So when we look at anything in here, right, what can potentially be bearish? Well, at the time, possibly that gap if we get back into it rather quickly. We don't. We have a gap here, imbalance right there too. We have this gap right here. The market does trade lower. It has already traded into that and then lower. So that gap initially was a continuation. Right there. Initially trades into it and then continues for the low. We have some other gaps in here on the way down too. So we have to ask ourselves, all right, when the market trades higher, should it clear this high and then trade back into the range? Yeah, that's possible. That is possible. Is that a short, though, worth taking? If we get into anything in here, is there anything in that really screams, oh, we should short that? Oh, what about this up candle right here? That's an up candle before the down move. We should short that, right? No. We left such a large gap behind at the 193s up to 207, right? That the market, to me, would want to see that. It shouldn't clear that high and then just run and make a new low. It shouldn't do that. It shouldn't do that here. It shouldn't do that anywhere in here. To sum it all up, nothing about this is bearish to me. It's not, nothing about that is bearish. If we go to a weekly, right? Same idea. Anything in that bearish? Not really. That? No. This gap here, as already or as I've already mentioned, it does trade into that and immediately lower. So that was utilized for shorts already. So we should, in theory, right, like I told you earlier this year when I pointed to this gap, we should pretty much blaze right through that imbalance. That should not be bearish. It may be a little bit. We may see like a little bit of resistance, right? Some sensitivity is probably a better word. But realistically, we should jam through that. And if anything, what was once bearish can potentially become bullish, right? Now, in this example, it clearly does trade through that here, and it does not hold price, right? It doesn't hold price. But what it does do instead is it trades down for the lows. So it does manipulate the lows. And like I mentioned a minute ago, could it run these highs and then trade back into the range? I mean, it could. Is that worth the short when we have the market wanting to gravitate up here? No. It is much more likely to be bullish than to be bearish. So if nothing is going to stop price from going lower and continuing lower, because markets don't move in a straight line, we can expect, you know, some up days, some down days. But the predominant focus from the fucking beginning has been this gap. And we are not far off. So you see how hard that is? There's no difference between Google on a daily time frame and let's say NQ on a 15-minute, right? Like these highs in here, or maybe even like last week's high or some shit. Okay. If we have highs here, right? This was London, and that's London's high, right? We left behind some highs, traded lower for some lows. How far can price go below a low? An imbalance or a gap, right? What is that right fucking there? Sunday's gap. Hit Sunday's gap and then trades higher. Is there anything about that bearish? Is there anything about anything in here that's bearish after it trades lower? Because again, I want to make this as clear as possible. In the short term, yes. In not short as in lower, but as in small amount of time, right? Before it runs the low. On the way to the low, yes. That imbalance could be bearish. This up candle, that could be bearish. A little bit of retracement and some up candles, bearish. No problem. But once it has taken a low, once it is ready to seek opposing liquidity, is that same imbalance going to be bearish? No. You expect concepts to fail. Do you understand that? That was hard for me to grasp the first time I heard that. Right? I was like, wait. What? I thought we expect concepts to hold. Well, yeah. It's simultaneous. What do I mean by that? Both at the same time. If you're bullish, you expect bullish concepts to hold and bearish concepts to fail. Okay? So, and I didn't trade this. I mean, I don't usually trade pre-market anyway, but at the same time, right, you expect, oh, we've got two imbalances. So this one should hold. And if we had, let's say the next one, which would be here, right? Like some shit like that. Or if you include the gap, I'm not going to fault you for that. So you go, okay, if we are bullish, that should hold, that should fold. Right, Alex, that's a good point. Well, it can go both directions, but it can't stay in both directions for too long. It's going to seek liquidity at a certain point, yes. But you're right. So that we expect to hold, that we expect to fold, which means we expect it to fail. Or at a minimum, if we don't expect it to fail, we can wait to see if it does. And if it does fail, then it can become an inversion. And that makes sense. pun intended. And then equities is right there. Equities gaps higher, slightly lower, and then, right, fast markets occur when what? Fast markets occur when it is seeking opposing liquidity. It's already ran lower. It's already offered, it offered buy side on the way up, offered sell side on the way down. So we have no more need to trade back into Sunday's gap. Two imbalances, trade the first one, stop at the second. Bearish shit should fail. Bearish shit should fail. It's going to seek liquidity. It blows right through that. Is that a short? Why would that be a short? Why would you short? What's the short there? If there's no short, then you don't short. You know what I mean? Like, it's that fucking simple. And it can, and we see the continuation. Oh, Jorks, you know what? I saw your question. I answered it in my head and then I moved on. So the Disciplined Trader, I think, came out in 1990, if I'm not mistaken. But I do know it came out, I think, 10 years before Trading in the Zone. Trading in the Zone is the one he's known for. But Disciplined Trader actually came first. So I had a conversation with Paula Webb, his wife, probably like 2 months ago, as well as like a year and a half ago. And honestly, I felt really bad because she told me that Mark felt that he failed, right? And hopefully I don't tear up talking about this, but he wrote The Disciplined Trader and he thought, you know, he gave out everything. And then he was like, well, they still don't get it. So now I'm going to write Trading in the Zone. They co-wrote it together. It's just the publishers didn't want females, you know, on books in a male-dominated industry. We won't get into the politics and history of it, but that's the truth. Okay? So they co-wrote Trading in the Zone. They publish it. That's the one that basically goes viral, if you will. This was way before Smart Money Concepts. This was way before, you know, day trading on fucking TikTok and all this dumb shit, right? This was like the 90s or some shit. I thought both were wonderful. They're better every time I read it. But anyway, back to the Paula Webb conversation. She tells me, so in case you didn't know, Mark Douglas dies in 2016. If none of you knew that, he dies in 2016 in the middle of writing another book. Okay? And it's sad because she tells me that Mark felt like he failed. Like, that traders just aren't getting it, right? And personally, I thought they were wonderful books, you know? And I told her, I'm like, dude, I put your shit out there all the time. I tell everybody to read it or they're fucking dumb, you know? And that's what he was working on when he passed away. So I think she's going to put out more content, but that's the order. It went Disciplined Trader, and then I think about 10 years past, Trading in the Zone. So if you want to read them in order, that's how I would do it. What's good, Big James? And yeah, dude, Mark Douglas was the GOAT. She does do private, I don't want to say events, but like private teachings and stuff like that. I want to say she told me she was going to launch a YouTube channel. I don't know if she did. Y'all might have to look that up. See if there's like a Paula Webb YouTube or something to that effect. Because she was like, yeah, I want to partner, you know, with people and help put the, you know, more content out there. I was like, I'll fucking do it. But I told her, I was like, I got to get to 10K subs first. I was like, once I do that, I'll come back and, you know, see if we can do something. So maybe I'll partner with Paula Webb. That would be fucking cool. Making content, right? Making trading content with Mark Douglas's wife, bro. Shit. Sign me up. Sign me up, chat. That would be fucking awesome. And then I would absolutely shit on the MLM industry. Like, you fuckers. But anyway, I know I kind of ramble a little bit, but the point is, if it's not bearish, if nothing is going to stop price from trading higher, it will continue to trade higher. Why do I keep pushing this point? Because very important points need to be restated over and over again, because some people don't get it the first time around. Just like when I say the markets are manipulated, and if you trade inverted concepts on the way to opposing liquidity, you're going to take high probability trades, right? And I say that over and over again. I show you every fucking week. I show you in videos. I show you trades. Like, I try to give it all out there, man. I'm telling you these ideas because it will help you hold winners. Okay? What's good? Way of the Warrior and Darth Quinn. So that way, you know, hypothetical example, because we are on ES. We're probably going to move to currencies in just a second, though, because I said I was going to talk about the euro, and I want to do that. I want to say NQ makes a lower low and taps into Sunday's gap, whereas I don't even know where Sunday's gap is for ES. We hardly gapped in here. Yeah, that's hardly a gap. It's kind of just hidden back there. Okay, so what's the difference on that? If NQ traded lower and hit Sunday's gap, did ES do either one of those? No. No. It didn't do either one of those. So that to me is a very bullish signature. More on that when we get to the euro. Why would you get out of your entire position at the first high, right? Like, let's say you're in from somewhere in here or somewhere right here, whatever. And you see immediately 5 or 10 minutes, oh, I'm up 6, 7 points. I should just take TP and walk away. Right? Like, why would you do that when you know there's highs here and potentially a further run? You know what I mean? So it allows you, it's one of the ideas that allows you to hold trades. Right? That's why. Markets are neutral. The trend is manipulated. I mean, I wouldn't say all of that. Market information is neutral. Like right now, with the market on a 5-minute time frame of ES, currently an up close candle. Whenever that candle closes, that's information. And that information is neutral. If you're not in a trade, it's absolutely neutral. You don't give a fuck. If you are bullish, that information probably you like because you're making money. If you're short, that up candle might affect you a little bit because you're losing money effectively. Right? So it's all perception. That's the thing. It's all perception. It's the same up candle, but you can have 3 different views. Bulls like it, bears don't. Those who aren't trading couldn't care less. Or maybe they're upset because they're not trading and they missed a move or something. You know what I mean? Everybody sees the same price, right? We all see 63.73.5. But that all means something different depending on if you're long, short, or not in a trade. So the markets by nature are not neutral. The information they provide are neutral. Because markets are either going to be bullish, bearish, or consolidating. So, but that's just me. All right, let's go over to euro now, because I said I was going to comment on it, and now I want to do that. I think it was Damon or somebody in the Trade House Telegram. They had longed, I think, somewhere in here, right? So I mean, it is in the upper half. It is a little bit like late, if you will. I mean, it does offer like 40, 50 pips already. But the reason that I like this is because they pointed out the data high, which I like. If that is data high, of course. I mean, it looks like it. Look at that fucking wick on it. Now, the data low probably is that, but we do have like this low down here that was manipulated with that. So to me, that's the classic, not data low, but like a manipulation low, and then seeking for opposing liquidity, which would be data high. I don't look at this like a buy model, but if it was, it's like that's the manipulation, then the low risk long in here, first leg retracement, and the second leg to me would be that and higher, right? Now, why would I pick that low? For at least a couple of reasons. Number one, this is the retracement after we crossed 50%, and that's just eyeballing it, right? Because we don't cross 50% until here. We cross that there. We go back into a discount here. And the reason I like this low right there, what color is the pound? Isn't it like a white or like a red or some shit? It's got the queen on it or whatever. Well, whatever. I have like a $5 or a $10 bill somewhere. But anyway, euro higher there while pound is lower. So that to me is a signature of what? Accumulation. Accumulation. You closed too early. Yeah, see, you're fucked. I was just playing with you. A winning trade isn't bad, but you have to review the performance of it. You know what I mean? Because you could say, man, John, I had my first $1,000 day. This is great. But if you severely over leveraged to get there, that's not a good habit. So it might have been a positive trade, but it was not a good trade. You have to do, if there's one thing, at least one thing I can agree with in the Best Loser Wins book, it is internal analysis. I do like that. I agree with that 100%. It's not just your performance, your P&L at the end of the week or the day or the month or the year, whatever quarter, but it's also what happened internally. Because you could, hear me when I say this, all 60 of you, you could have the best P&L day, but with the worst performance. Does that make sense? Just like we expect certain concepts to be bullish while others be bearish at the same time, you can also have a really, really good P&L because you made money in a bull market being long or a bear market being short. But if you over leveraged to get there, if you were emotionally drained, you were revenge trading, right? At the same time, you were revenge trading and over leveraging, right? That's two major fuck ups right there. But because that trade panned out and you made money, you think it's a good day. It's not. For P&L, you grew the account, but you basically cheated. And I say that because you simultaneously breaking those rules might have helped you in that one particular instance, but that one particular instance is not sustainable Consistency will beat the fucking brakes off of intensity. Okay? Intensity is great for like the short term. For example, the UFC fighters need to make weight. So they go into one of those little cocoon type things. They sweat like 5 or 10 pounds off, and then they go over and do the weigh-in, and they made it. And then what happens the next day? They gain like 10, 15 pounds back. Because that's intensity. But consistency is what makes them a good fighter. Because they're practicing all the time and all that shit. Does that make sense? In trading, anyone can go in there and buy the low and risk 100% of their account to make 500% of their account. Of course, you could. You could absolutely, you can make, you know what I'm saying? You could make accounts do absolute backflips. The problem with that is it is not sustainable in the long run. That's the key. Right, Josh? We're here for the long run, consistent discipline habits, right? That's why I'm an advocate for taking partials, because partials grow the account. Not everybody agrees with that. I don't know why you would disagree with making money, but, you know, logic is not for, this YouTube stream is not to debate logic, okay? But to deny yourself money, to me, is just, that defeats the whole purpose of trading, right? You got into trading to not trade, it's pointless. You got into trading to be up on a trade and not take partials, it just defeats the purpose. Mark Douglas literally said in The Disciplined Trader, page 222, third paragraph, last sentence, if you find yourself on a winning trade, the market can do anything, even take away your profits, so take something off. It's that simple. Okay? But anyway, we got to come back to the point here. I know look, I always have a lot of caffeine, so sometimes I go off on these side streets and tangents. Let's get back on the main road for a minute. Let's get back on the highway. Euro trading higher here versus the pound going lower. That to me does signify some strength here. So then, yes, we get higher pricing. Is anything in that going to be bearish? Doesn't look like it. In this leg here, and this is just on a 1 hour, in that leg here, what would be bearish about that? Well, you do have one imbalance, sure, that it traded into to go lower. So since we've already done that, right? Since this high is still open, remember this is a data high, that low has already been taken. We've already crossed 50%. We've already shown accumulation. So what are the signs pointing to? Remember we did this last week. Stacking evidence. How do we make the lows? Where are we right now? Where are we going? Can we justify this? Can we justify that? Can we justify shorts? Not necessarily. But can we justify longs when we have open liquidity up here and liquidity swept already here? That imbalance was bearish. But then it gets traded through. See that? At London this morning, right? About, quick math, 9 hours ago maybe? Or whatever it was, right here. Yeah, it's the 21st. That imbalance has already been traded through. So what can it potentially become? An inversion. Look at that. Inversion. Leaves the bottom half open. Or at least a portion of the bottom half open. Trades higher. Are we going to short above that high? I mean, we could. Oh, well, what about these lows down here? I mean, it could. Sure. It could go. Those are low resistant lows, John. They are. If the market is bearish, we just had a divergence down here that showed strength. That may be a target way down the road. I don't give a fuck about down the road because we're here right now. So what is the next immediate thing going to do? That's not a high that you short. the market trades down. And that is the imbalance that, again, I don't know if it was Damon or someone else. I'm in a lot of chats. There's a lot of you that we interact with each other. So I can't remember everybody's name. That imbalance right there is what they had traded. And that's why when I looked at it, when I saw their screenshot, I was like, let me look at British pound real quick. And I saw that those lows were lower. And I'm like, oh yeah, that was a good trade. That was solid. This wick right here, to me, why would this be bearish? What in there would be bearish? You know what I mean? What? Why would price magically stop anywhere in that? Why? There is absolutely no reason that at least that I can think of, that this would be a short, and instead we should just push right on through that and go for that high. That makes sense to me. Right? So, I mean, yeah, we've seen a pullback, but what's the overall here? Lows taken, 1 hour inversion, lows taken, 1 hour imbalance, boom. That is good trading. Even if it doesn't, oh, did we get rid of the high? Okay. Even if that doesn't get hit and this comes all the way back down, the point is there was still at a minimum like 50 something pips offered. That's good trading. Target need not be met. So whoever that was, I told you I'd go over it, and that's why I think it was a good trade. Manipulation, accumulation, inversion. This is not a mitigation, but it acts like one because this was accumulation. So that up candle here, that acts as a mitigation. So imbalance and a mitigation overlap, trading in the direction of opposing liquidity. That's good trading. That's good trading. And yeah, Jordan D, that's a good point. That's why you take partials. I would almost argue, right, that if you're in a trade on euro or any currency for that matter, and you're up 50 pips and you don't take partials, that's fucking wild to me. That's wild to me. But John, we could get 70, 80 or more if it goes up here. Right. But what happens if it doesn't, if it just like prints an engineered high, which I think that is at the moment. What if it just prints an engineered high and then comes down to run the lows to then run the highs later? And you had a chance to take 50 and you said, no, fuck that. You got into trading. The market gave you an opportunity to make some bread and you said, fuck that. Bro, I just don't understand. I don't understand that at all. I just really don't. Right. And this is where the biggest arguments come in, and they say, yeah, but taking partials is stupid. Because if, and they always use that fucking word, right? If, right? If I wasn't a dumbass. But if it goes to the TP, you would have made more. Mathematically, yes. You're absolutely right. Nobody would ever disagree with that. If it does go higher and clear your highs or whatever, your target, blah, 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 yeah, you would have made more. Yes. But if it reverses and goes back to your entry, you make nothing. But the person who took partials made money. And that's why taking partials, to me, it's the best of both worlds. You do pay yourself, so you grow the account. You leave a portion, let's just say half, in case it does continue. So you do get your target. You do not make as much, no. But I like being in the habit of paying myself. Right? We got into trading, right? To make money, not to be right, not to start a YouTube channel, not to fucking sell $1,000 courses and shit or $297 PDFs, right? Y'all don't know who I'm talking about. It's okay. We got in it to make money. So to purposely avoid making money, that is just, I don't know if redundant is the right word, but it's just, that doesn't make sense to me at all. I just can't get jiggy with that. Can't do it. I don't agree. So, but anyway, we've talked about a lot of things today, and I feel like I have said what I needed to say. So if you guys have any last minute questions, now is the time. Do you have any questions on what we've covered? How to hold trades? Why taking partials makes sense, pun intended, right? Instead of all or nothing trading. All or nothing trading is an absolute recipe for an emotional roller coaster. It just is. It just is. And nobody, except psychopaths, okay? But for everybody else in the world, everybody has emotions. We do not control those. Someone puts a gun in your face, you're probably going to be a little bit nervous or a little bit anxious. Death is staring at you in the face. You know what I mean? You're putting on size on a trade, it's going against you. You might be a little bit nervous. You put on some size, the market goes your way, you're going to probably be a little bit happy because you know you're in profit. Going break even, to me, that's what resets the emotions for me, right? If I'm in big on a trade and I start, John, you should hold that bitch. You see those highs up there? You see that imbalance above it? You've already done the fucking math. You know you can make a shit ton, or at least a lot. It's all relative, right? You could do this, you could do that. But it's like, well, we're above a previous high, and that's a partial. So I'm going to take a partial. If I don't take a partial, let's just say I'm in one contract. Okay, sure. Now we can go break even or plus some, and then we can relax now. Worst case scenario, we don't lose. Now we can relax. We could sleep if we want to hold it overnight, whatever the case. When you are in, because, and I've been here, right? I've been trading for 11 years. If I'm all or nothing, all in, all out, no partials, whatever, right? It just creates such a range of emotions, and trading with all of that is very difficult, and that's probably why a lot of people can't do it. You know what I mean? But if you go break even, that to me, we come back, right? If we take partials, that's even better. Okay, we've made money, now we're break even. Worst case scenario, we had a profitable day. It's so much easier to hold now because we've already paid ourselves. Versus having open risk, thinking, well, yeah, the market could be up, but it could come all the way back down to my stop loss too. And I would feel like shit if that happened. You know? So whenever I started teaching, okay, especially in the MLM industry, and I say this from time to time, this is just my opinion. This is the way I do things. This is the way I like to do things, right? When it comes to the analysis, managing trades, even adding to winners, we didn't really talk about that today, but you know, this is just the way that John Fib does it. Okay, if you like other shit better, then you roll with that. And yeah, Jordan, I think, yeah, I didn't see your comment until now, but when it comes back to your entry and you didn't take partials, you feel like an asshole. You feel like a straight dumbass because you were up. It doesn't even matter what amount of money.
let's just say 500 bucks. You were plus $500 on the day in unrealized gains, right? Floating profit. And yet you walked away with nothing. That's goober. That's goober. Yeah, every time. They Warrior asked, after you take partials, you trail your stop loss or is in BE. So it depends, okay? And the reason that it depends is because it depends on which part of the market maker model I'm trading. If I'm in at the low risk, this isn't that, but let's just say this. If I'm in at the low risk long, right? Like right off the low. Yeah, I'll take partials and go break even. If we get a final like terminus, yeah, I'll take partials again, or I might close out altogether. If I do decide to hold, that's when my stop does go deep into profit. So it depends on which stage of a market maker buy model or a sell model that I'm trading. But generally speaking, anytime I partial, I'm probably already break even, plus some. And no, Jorks, I did not. The only trade that I took today was exiting McDonald's. Thank you, Eric. Appreciate that, Josh. Thoughts on metals? Dude, metals, man. I love metals right now. I can't even get rid of my silver, honestly. People just don't want it. People just don't want silver. So, bro, we're probably going to get to 40, honestly. Look at that. That's beautiful. Matter of fact, this continues on the same idea. Is there anything bearish about silver? Right? You already know me. I got to put my little tweets on here, dog. I got to put my tweets on here a little bit. I told you so. Right? Back in October of 2023, when we were at like 21, bitch, we're at 38, 39. The futures are at 39 and a half, actually. But what on the left is bearish? There's nothing bearish about that. What about the monthly time frame? Is there anything bearish about any of that? Not really. Shit. I don't want to say that we'll get above 50, but I wouldn't be surprised between now and the next year or two if we get to 50. That wouldn't surprise me at all. Nothing about that's bearish. And most of you weren't even trading back here. May 2011. I was in high school. I think. Yeah, I was in high school back then. Don't seem bearish to me. And we haven't been. So, my shit just becomes more valuable all the time. All the time. Like, dude, no shit. I can't even get rid of it. People are trying to like underbid. They're like, I'll give you $3,600. I'm like, yeah, fuck off. For the 100 ounce. Right? They're like, I'll give you 3,600 each. Oh, fuck you. So, but anyway, that's all that I got. We pretty much made it to an hour anyway. So yeah, I don't really have any expectations for this afternoon for indices. I have no idea. Looks like we have some clean highs, but I'm not doing anything. I'm not going to trade today, probably. So I'll leave it alone. But with that, y'all be good. Be blessed. We'll be here same time, same place tomorrow on the 22nd for another live stream. And I will, Jordan. I will. Y'all be good, man. I'll see you tomorrow.
Somebody was in here. Who? Lane, you know who I'm talking about. Your little imaginary friend. Or something like that. I don't get it.